All right. How do I... All right. So, obviously, huge red day today. Just nothing but knife. Looking really at this monthly, especially end of day today, is the end of the monthly candle. So, pretty big if we close under this low here, in my eyes. So that's definitely a level to keep on your chart for the rest of the day, watching how we react to this area here and see if we're going to stay under it. Drop down into the weekly chart. Obviously we have this fair value gap. Now the one thing to keep in mind though is even though we have this FVG, we also have this one lower, and we also have this inverse down here. So nothing super important about this FVG in my opinion. Also the fact that we swept this high, good displacement above, and then now we're immediately getting this rejection down. Pretty bearish going into next week for sure. This daily FVG is really kind of what I would be looking at more so. Seeing how we react to this the rest of the day. So this is kind of really where my bias is. If we do close under this, I would really expect a move down to here at the very minimum, and more likely at least a move down to this low in here, especially seeing as we have this imbalance here that needs to get filled. So likely we're going to close under this, and then next week the bias is going to be maybe a Monday pullback, and then the rest of the week we dive into this down here. That's kind of what I'm looking at. Now getting on to like the hourly charts for the rest of the day. Obviously there's not much to go off of. We do have this FVG that looks like we're going to get a close under, or we actually did. Okay, so bias is still bearish. However, when we do get a move like this where it's just nothing but knife, we do have a lot of built up liquidity. Whoops. We have a lot of built up liquidity here, right? So we definitely could see a trade that gets us back up there, but we need to see some bullish order flow come in. So yeah. Five-minute chart, this is going to be a good way of determining bias potentially. It's 5-minute FVG here. Close above this, and we can look for a trade to take us higher. It is obviously 12 o'clock, so lunch hour, so not a lot to be looking at here. But if we do get it like a S&T between 12:45 and 1:15, those are kind of the times that I'm really looking for a reversal for an S&T to form. I really like that. Just right after that lunch macro. And you can usually find that S&T to form between those time periods. If you watch Zusi, he kind of hints at a lot of different times that S&Ts form. And I really like using that as bias, especially keeping yourself from trading during shitty times, which is exactly right now. So right now, it's not expecting much of a trade anytime soon. Still very bearish. Obviously, we even have this 2-minute FVG that get rejected. So really just looking for a post-lunch hour S&T bullish. Maybe get above this 5-minute FVG, and then we can take a trade potentially, up to some resting liquidity, here and here, stuff like this. Now the one thing to keep in mind is while we do have a lot of liquidity on this trend line, you will see that we're actually getting a lot of clean turtle soup. So what's happening is we're getting these pushes up, taking out buy stops, and then pushing lower. So you can see here, you can see here, you can see, whoops, here, right? We are just continuously taking these wicks and then dumping lower, taking a wick, dumping lower, taking a wick, dumping lower, taking a wick, dumping lower. Again, right here, taking a wick, dumping lower. So what this means is it's just clear, very obvious bearish order flow. There's nothing else to it. There's literally no reason to trade along right now. I did try and long after this inverse, right? A little aggressive with the fact that we took this internal, but it looked good. Took a small loss, that's okay. But now, really need to see some displacement over one of these kind of soup entries for lower. See, looking at ES, looks like it's pretty much telling the same story. Yeah. 15-minute chart. Not much to go back from. Alright, let's hop in the 90-minute and see if we can see any timetables. Let's see. So, yeah, 12 o'clock. I'm on West Coast time, so it says 9. That's why that is. When did this high come? Yeah, we are really bearish. This is pretty crazy. Posted this in my Twitter yesterday. You can see just every single 90-minute order block getting rejected. And we saw the exact same thing occur here. Right? 90-minute order block, rejected, right? Now you might be asking why I'm using this instead of this. The main reason is because this is the order block that it's more of actually a propulsion block. So this is the order block that formed after rejecting off this order block. So these are going to be a lot stronger. The only thing that this has going for it is that it did purge some liquidity and pop into a fair value gap. So it's not a terrible order block to use, but this is just going to be stronger because this is what started the move down here after rejecting this order block. So this propulsion block is going to be a lot stronger. So yeah, that's why I'm using this order block instead of this guy right here. If that makes sense. If you guys have any questions in chat, or if you have any questions, just type them in chat and I'll answer them. Eat bricks good. What's good, Rich Epo? Nice. The reason this isn't super, I mean, this is definitely liquidity that we're probably going to target. We're definitely coming down to here, in my opinion. But the reason I think we're probably going even lower is because this liquidity is high resistance because we already got, this liquidity formed after taking this here. Whereas this, you can see these three here are just untapped. This is liquidity that was created based on nothing. This didn't take other sell side in an obvious manner. This obviously took this liquidity, which looks to me is probably some kind of data lows, right? Because we have this wick up and then the wick down, so this is probably some sort of data lows or something like that, and that's why this took here. So my main bias is going to be this here. Right, this is kind of really what I'm looking at, and this gives us another 200 points lower. Now I would like to see, a push somewhere higher into like the 50%. However, what do we know about where parabolic runs usually occur? 90% of the time, when we get runs that are very quick and aggressive with no pullbacks, if it's the upside, it's going to happen in premium, these parabolic quick fast runs, and when we're on a sell side of the curve, it's going to be in discount. That's just what you always see pretty much. So you can see here, right, if this is the buy, if this is the sell side of the curve, buy side of the curve, where does the parabolic run happen? It happens here, right? No pullback, and we just run for buy side, right? This is a 250 point move in like one day, pretty much. Like not even a day, like half a day, right? So that's most likely why we're seeing this occur here, right? Bouncing off order block, order block, order block, order block, third time, third leg of distribution, and we get the knife down, right? So here's your AMD model, accumulation occurs here. Or I guess if you want to do AMD, here's your accumulation phase, right? And then you have your manipulation is up here. And then distribution lower, we have reaccumulation, 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 right? And then just continuing the box lower, we get to discount, and now we're getting this parabolic run lower. Any questions about that? Let's see what's going on in the 5. The 1 minute charts, nothing. Just continuously knifing lower. Right. What do we see? We see the same thing again, right? We're just continuing these turtle soups. Here. I'm just going to make this a solid line. Oops. Right. Just gotta see this over and over and over and over again as we push lower. Now we are getting a little bit of an SMT here. If we get above this, we could try long. It's going to be lower probability because we're not in a key time for this to reverse. I would like to see this reverse. If we're going to get a reversal, I want to see it happen 12:45 to 10:15. That's where I want the low to come in. In a perfect world. Do we have any questions about anything? Can everyone hear everything okay? Take that as a yes. Test in front of the 15 second, see if we can see what's going on here. Now, when you're trading super low time frames like the 15 second, I don't recommend it. It's quite difficult. I think the 30 second is much easier, but the 15 second can be fun. But if you're going to trade something like the 15 second, you will see that oftentimes FVGs just are not clean. So when you are going to take, if you take inverses or just like simple models on the 15 second, I always like to wait for something to hold first. So like this, for example, let's say you want to take, if you wanted to take this 15 second FVG inverse, and we just immediately ripped up, that's going to be a lot less probability than if we do something like this where we push down, we reject it, showing that there is algorithmic action occurring here, and then if we get above it now, it's probably going to be a lot higher probability for us to continue higher after originally rejecting the 15 second FVG to begin with. And it's also been a little while since we've had any soups, right? So the last one really happened here. And since then, it's just been lower, 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 lower. So we do have all of this liquidity just resting. And now, if we get above, here's going to be the bias here. This is what I want to see. Something like this. Now we'll see how it works. And this would be like the target I would want to target. And then also these equal highs up here. Right? There's a 30 second FVG. Let's switch over. Now, like I said, no matter how you cut it, trading the 15 seconds is going to be more risky, Happens a lot faster, it's not as clean. You will get, closes above FVGs that immediately reverse, stuff like that. It's just not going to be as crispy. But it does provide a lot more entries. So if you know what you're looking for, it can be quite effective. Wow. Yeah, this bearish order flow is absolutely crazy right now. Alright, let's see. Oops. Let's see here. Yeah, we're going to use this and see where our standard deviations are. Yeah. We've already passed the 1 here. Let's see. Yeah. So using that standard deviation leg, I would say that 18027 is pretty likely to occur there. Another 30-second FVG here. Alright, this looks a little better for a reversal, a temporary reversal to happen here, in my opinion. Formed equal lows, quick purge, and now we're getting momentum back up. Just tape reading, you just see things after, you know, hundreds of hours staring at charts that this is pretty common reversal pattern. Exactly, you see this rip right back up. Just like the creation of these lows, and then just how quickly it nosedives and just V reversals right back up. It just happens so much. It's just such a frequent pattern. Now, if we get above the 30-second, I would assume we're probably gonna go at least to here. I would say 276. Yeah, look at this. Just right on schedule, right as I said that. So if you wanted to enter this, I mean, I probably wouldn't want to get in this high. It's a little bit risky. But there's a good chance we just rip all the way up, yeah. Daily chart looks wild. Yeah, it is pretty crazy. Honestly, it looks very, very, very bearish. It's pretty crazy how bearish the daily chart is. Yeah. I mean, looking at this, like, if I saw this as like a 1 minute chart or a 5 minute chart, right, which is sometimes can really help, is just like thinking of this as a 1 minute chart or a 5 minute chart, something like that. You know, I'm thinking we are definitely going for this slowdown here, right? When you think of it as a daily chart, you really get kind of tunnel vision into like, where's the next tiny little low? But like, if you just think of this as a 1 minute chart, 5 minute chart, even a 15-minute chart, it can really help give you bias. And you know, if this was the 5 minute chart or the 1 minute chart, obviously, yeah, this low here looks good, and then we have this FVG and all this liquidity, you know, resting in here. So that's definitely something. But until I'm proven otherwise, probably gonna stay bearish until, you know, I move down to like this low or even this low down here, right? But like I said, that can easily be disproven if we, you know, find a bottom within one of these high time frame FVGs, you know, and we start pushing higher, and we maybe get some sort of like inverse FVG, you know, from an order block, start seeing, you know, the buy side of a curve start to form here. Then obviously you just switch that bias, and now we're bullish again. But yeah. 30 seconds rejecting again. And we did sweep the high, just barely. Why is this an order block, guys? Do you guys know? What makes this an order block and not down here or whatever? Any ideas? Now, do I know if it's going to hold? Not really. We swept this liquidity. We're bouncing off this 30-second FVG, 1, 2, 3 touches. I don't know if it's going to hold, but I would assume that if we get down into here, we're at least going to get a bounce. Some sort of reaction is what I would expect. If we get down there, it's still a good chance that we just bounce off this inverse. Now, we have 1, 2, 3 touches off this FVG, right? Clearly the algorithm is seeing this, and it's at least some sort of speed bump, right? So it's either going to be a clean reaction down here, or it's a speed bump to where we're going to go higher. So this is now a very key FVG in my eyes. So now if we do get above this with a solid close above, I'm probably looking to go long. You know, if you want to take a scalp, something like this, not a terrible idea. The one thing I don't like is that we do have this 15-second FVG that we rejected once already. Include the volume balance, obviously. But with that said, I would still think we at least do something like this, right? Assuming we get above it, let's say we close like here. All right. Now, maybe you take an entry, maybe you sit this one out. Whatever you say, whatever you feel comfortable doing. But I would say, whoops. I would say we at least get a move up to this high, right? And that would be a break-even stop. Alright, so now if we get a push high and we just instantly squeeze to here, no way am I entering this. Maybe if we get a close above that, but no way would I enter if we get a close above this high. But a close here, maybe try to catch a close here and then we wick down a little. Catch that entry there for the break-even stop to here with a tight stop loss under this, what would be an IFVG. It's honestly not a terrible trade, even on the 30-second chart. Why? Because we have good bias at this IFVG. I told you about the signature and price here, right? We have these equal lows, the quick V reversal, creation of this order block here, which we actually got above, and we've actually already bounced off of it once, right? Why is this a pretty strong order block, in my opinion? Because we have these lows here. We got this quick tap under, so it's an order block that formed after a purge of liquidity. We purged these equal lows, right? And that's what made the order block form. So when that occurs, it's a lot stronger than like if this formed without taking any liquidity, or if this didn't enter into a fair value gap or anything like that. This is going to be a lot less strong. But the fact that we purged liquidity and got that V reversal makes this order block pretty strong. Alright, there's the close above. So now I'm thinking you could take an entry, yeah, right about right here, 68, 66, 67. It's going to be pretty aggressive, and then the stop loss would be a close under this FVG. And there's the FVG form. So now if you were to enter this, this would be the stop loss. But like I said, this is not going to be your A+ setup. This is going to be, you know, that B minus B setup. Low time frame, you're trading 30-second chart. We tapped into this 15-second FVG here for a second time. We're kind of choppy, you know, all these things. Now, with that said, I still do believe we're going to get up to here until I'm disproven. 5-minute FVG at 280, 285. I'm looking to short, I think. 280, 285. This right here. So, I mean, I definitely would not just slap a short if we get up there. Like, I wouldn't just, you know, we go up there and you're just like, okay, slap short at 283. Now we get up there, we get, you know, a 1 minute sell model. Sure, maybe. But we're in heavy, heavy, heavy discount. So it's never a good idea just to slap a random short at a 5 minute FEG or anything like that. It's not a good idea to just slap a short just because we tap into an FEG. Especially when we have, you know, this FEG, we have this one still up here, right? If you hop on a 15-minute chart, there's FEGs here, you know, that goes all the way up to 96. So, just something to think about. Now, if I were in this long, for example, I would not be stopped out here. Like I said, run a 30-second chart, 15-second chart. It's not going to be clean. It's not going to be perfect. So my stop loss in a trade like this, if I were to take this trade, it would have to be at least under this candle low. If not, if I'm going to be a little bit more, you know, leeway, I'm putting it here. But it's definitely not going to be, you know, less than a point under that when I know for a fact it's not going to be super clean. Also, you have this 15-second, you know, FEG here, which it's still holding. So you have to be, whoops, a lot more lenient when you're trading small time frames like this. This pun is marking everything. Now, what made this is, see how we're getting at least some sort of reaction? Do I know if this order block's going to hold? No, I don't know. If the bias is lower, we're going to go lower. But we got that little initial reaction, in my opinion, it's because this is the order block that formed after taking this low here and bouncing off this 15-second FEG. Right? Now, these things like that, you know, system that I mentioned, it's going to work infinitely better on a 5-minute chart, 1-minute chart, 15-minute chart, things like that. When you're trading the 15-second, 30-second, this is just for tape reading purposes, but when you are trading charts like this, you're not going to get super clean moves. It's just not going to happen. Still bullish here, guys. Like that entry I said, until you're proven otherwise, there's no reason to, you know, shy away from it. The 1 minute look like? 1 minute also honestly bullish in the one, you know. Clear bullish order flow here for now. Right? Now it is worth mentioning that, this inverse FVG we got above, and then we took this internal high, right? So this is going to be, if you were to take like this inverse, this is going to be your break-even trade. And now we got this knife down, so I was wrong on the tape read on the 15-second chart. That's okay, because I'm not trading it, Now this actually could be much more bullish potentially. This inducement. Creates this order block. Displacement above this, and we should get something like this. Yeah, this should easily rip up to here. Probably higher, honestly. Probably going to this, honestly, I would think we're going to 94 on a close over this 15-second FVG. There it is. Power of 3 move. What time frame are you looking at? Just talking about like AMD. Okay. This would be your break-even stop if you took anything like that. Still looks good for higher, in my opinion. Let's see, we also do have this SMT right here. Sorry guys, 1 second, my dog's going crazy. One sec. So now, this is exactly why Jackson, I said not to short on the 5-minute chart, blind shorting. This just was a bad idea. I hope you didn't take that because, yeah, you can just clearly see this is just super bullish, especially once we got this S&T inducement. It's just straight rip, and then you don't want to just short that. Yeah, and then the S&T as well, of course. Yeah, if you're not trading with, I mean, YM is, you don't really need it, honestly. But if you're not trading at least like this, where you have NQ and ES side by side, or like this, where you have all three, you're just trading blind. You're gonna miss so much. You really are at a huge disadvantage if you don't have at least ES and NQ pulled up. Having YM, just another tool, but ES and Q for sure needs to be side by side. Now this is what's bizarre for me, is just how bearish Dixie is. A lot of times you just don't get clean price action when you see this type of divergence where you have NQ on a negative 1.7% day, and on the same day Dixie's down, 0.1%, whatever it is. It just should be, up at least 0.5% on a day like this. This is what my Dixie chart looks like. IFEG in the weekly, pretty clearly see it having some resistance here. Here's your soup. So personally, this is a very difficult chart for me to determine a bias. You go under this weekly FEG. Now we have this. We have lows down here, right? Seeing divergence with indices. So trying to trade like Euro USD, it's going to be tough in my opinion. When you see Dixie just not, showing a clear direction, trading anything that in any USD pair is likely going to be pretty difficult. Alright, we're finally getting into that PM lunch hour macro. So, yeah, let's see. This order block here. We've already taken this low down here, so I really don't want to see us retrace back into this 1-minute FEG. This should definitely remain untapped. If we do tap back into this, things could get a lot more bearish. Let's check to see any other SMTs formed. Not that I can see. let's map out discount premium, current range. All right. $275.5. We have two FVGs here, inverse FVGs here. See what the 10 minute shows that. Not a ton going on there. You can see this flip here, so this might be interesting to watch. I'm going to mark out that 4-minute FVG, and then we're going to pop back into the 1, 2. Alright. I like this as an entry. Let's see here. Let's just see if we can get a paper trade going. Just to see. What is this at? Let's clear the balance on this. How do I do this? I haven't paper traded and I don't even know how long. You guys know how to clear balance on a paper trade account? Oh, there it is. Reset. Cool. So, if this is the 4-minute IFVG, here's the 2-minute. We're gonna go in here with 5 units. If we can get an entry. Stop loss. When I trade like this, I want it to be under the order block on the 1 minute, this order block here. At least under the 50% of this. So, about right here. So this is looking like, what is this? 14-point stop. Nothing too much. And then TP. See the 5-minute chart. This is difficult for a final TP. Something around right here maybe. And then obviously we would trim here. By 3 comes off there. So this is going to be 25 points, only risking 14, right? This looks like a very solid setup. I like this a lot. Now let's figure out where our break-even stop is going to be. It depends the way you trade. If you're super mechanical, trading, usually it's just going to be CP1 hit, break-even stop, right? A little less mechanical if you're a little more technical. Maybe you look for some sort of inverse PD array, so like you know, a break maybe of this order block here. It's not very strong, but maybe a break of this one. We get above this, like to here. Stop goes to break even, something like this. There's a big push. Or, you know, a creation of a 1-minute FVG that should hold. You know, something like that. Anyone take this trade? Hopefully, someone took it. A few of you guys didn't, but nice. Missed the entry. Yeah, it's a tough entry, but honestly, like these major, down close candles are dumps like 11 points. Especially when you have a bullish model like this, it's so frequent. You'll see these just quick drops into the entry and then just rips right back up, or vice versa. So especially like this, even if you missed like the entry that I took, you can really hop in on like a 30-second or whatever, find where that order block is, and then you can take this trade off the creation of this order block, stuff like this. It's going to be more risky, and you're going to have to maybe change your stop loss to maybe a close end of this order block. So that's probably what I'll do here. We shouldn't come down into this order block and push under it. So I'll move the stop loss. So you have to change your stop, or just enter with much less risk, right? Enter, let's say, if you normally enter 2 minis, for example, or micros, whatever it may be. Let's say you enter 2 micros, 2 minis, and your average stop loss is 15 points. Let's say you miss this entry, but it still is a good setup, right? And you find another entry, right? Now your stop loss is 25 points or 30 points. Instead of entering those 2 minis or 2 micros, now you enter 1 mini, 1 micro. As long as you keep that dollar amount of risk the same, you should be okay. Now here, stop loss should probably go break even because we took this internal high, right? So this would be like a mechanical system, right, where you immediately just put stop to break even. If you're less mechanical and you kind of trade based on the confidence in the setup, then maybe you leave your stop loss and you leave it alone. But just for the sake of this, we can put the stop loss to break even, especially with how good of an entry we get. If this wasn't paper, I'd be pretty upset letting this go red, right? Because we have such a hot entry. The entry's under 50% of this order block, so in my opinion, there's not much of a point in letting us tap back down into this. We should continue higher if we're going to continue higher. Right? If the bias is lower, then we should just knife anyways, and it won't matter if we have a stop loss here or a stop loss down here. This is what patience does. Notice how no real takes. I mentioned a few things you could do, what you couldn't do, whatever. But there was no real takes occurring in here. Even when this inducement occurred, right? And I was like, holy crap, this is looking pretty hot here. That doesn't necessarily mean you just go ahead and slap an entry. You're gonna get this entry here, most likely, most of the time. And you just got to stay patient for this entire setup to occur. I named down here, I said that I think this is probably a low. This is a reversal pattern down here, right? That doesn't mean I'm just going to slap an entry just because I have the screen time to do so, right? Still going to be patient, still going to take my time, let this entire thing play out, let the model come to me, and then on that 1 minute chart where I have a lot more confidence, 1 minute chart, I used the 2 minute, I used even the 4 minute here for this inverse, right? This is a beautiful inverse in the 4 minute. And why did I use the 4 minute here? Anyone know? Why didn't I use the 5 minute or the 3 minute? Could use the 5, right? Now I use the 4 minute because you can see it's very obvious to me. Like maybe it's just screen time, but it's very obvious that this was a key level. This area here, this FVG was very key to the algorithm. It was using this as pretty clear resistance, 1 tap, 2 tap, 3 tap. We push lower. We get this major wick down, and then we get this extremely strong close above. So when you see stuff like this, it's most likely going to react in a similar way once we get above it and come back down. What do you see? We come back up, we come back down, perfectly into the mean threshold of the FVG, pop up, and then we also have this 2-minute chart where we have a singular FVG. It's a little bit cluttered here, but you can see the singular FVG here in the 2-minute. On the 1-minute, yeah, pretty similar on this. You have a singular FVG as well, so the 1-minute's pretty much exactly the same. You could use the 1, you could use the 2, it's the same thing there. 3-minute chart, same as well even. We tap back in to the bottom. But see how large this is? It's such a large entry to take between 84 to 70. So the 1-minute and the 2-minute provided a much cleaner, tighter entry. And that's why I use the 2-minute. You could use the 1-minute as well. Pretty much the exact same. Now if the 1-minute had like 2 separate gaps, and the 2-minute had like the 1 singular one we see here, that's when I'm always going to use the 2. Right? That's why it's important here. I use the 1, 2, 3, 4, and 5. It's all fractal. You just want to find the chart that has the cleanest price action, right? Eliminating the noise. You know, if you have 5 fair value gaps all in a row on like a 1-minute, hop into the 2-minute, see what it looks like. 3-minute, see what it looks like. Usually, at least one of those is going to have a very clean, one singular FVG. And if that's not the case, then you're probably not going to trade it anyways, right? It is what it is. Alright, here we go. We're getting that push up higher. Staying nice and patient throughout this whole trade. You can see how this 1-minute FVG is just nicely holding as well. This is exactly what you want to see. Super bullish here. Don't see any reason why we're not going to at least hit 97. Like, this is looking like pretty much a lock to me. There we go. Just toying with me right now. And there it is. Cool. I did not fail. There it is. So, I risked 14 points there. Took my trim for 25. Alright, that's the risk to reward you want. Now we have 2 runners. I'm actually going to move this. Let's set 1 to right here. Why am I doing right here? Because on the 30-second chart, you can see these equal highs right there. We also have this little FVG right there, so it's a good point to take another one off the table. What the hell? How does that... I don't know how keyword trading works, but I don't understand how this doesn't fill. A tick above. Ah, whatever. There it goes. Cool. So there's the fill on that, and now we have one last mini as a runner. Gonna get rid of some of this clutter here. Now we're getting into higher resistance of liquidity. We have this high here that was taken. Gonna run that probably here, here, here. You can see all these that I've lined up. So now it's going to be really difficult to say, unless we get a run all the way back up to 370, it's going to be very difficult to determine which one we're going to bounce off of right now. It's going to be hard. One thing that can help is drawing your standard deviation legs, so bottom to here, pretty clean. Right, we have the 2 here, 2.5. So usually when I'm trading something like this and not sure where it's going to go, you either have to tape read live price action, like on the 1 minute, 30-second chart, and just do your best to find the reversal when it comes. But that's a really difficult thing to do, and you might get emotional during the trade because you're in live, especially if this is a funded account, really difficult to do. So the better thing to do, in my opinion,
is you go and you find the standard deviation leg here. This is where we get into a little more advanced stuff, is understanding how to draw these standard deviation legs. And then you want to go between the 2 and the 2.5. And you want to find liquidity between there. Above the 2, maybe a little above the 2.5, but usually between the 2 and the 2.5 is where I like to go. And what do I see here? 3-3, what is this? 3-3-4. Alright, so I'm going to drop this down. Could I try and hold it for here? Sure. It might hit, it might not, right? But we're still bearish, in my opinion, overall. Obviously, this setup's pretty bullish, so we might even get a run higher, you know. But I risked 14 points in this trade. I'm already up 40, right? This will be a 70-point trade, something like this. 60-point trade. That's good enough for me, right? I don't need to go for more than that. You have this 5-minute gap here. Already starting to reject it. It's not ideal. Then we talked about. I know it gets cluttered here with my stuff. Oh, here we go. We talked about the monthly, right? Here it is. Here's the monthly. Okay. That's where that line is. 3.15, that's what this line is here. You can see we're already starting to get some rejection there. It's not a coincidence, guys. Just perfectly off that monthly open, right? And we have that 5-minute gap as well. Or that's a 4-minute gap. There's the 5. 5 looks a little cleaner to me. Let me just do that. Okay. Now here, we get this rejection. We took out that high. This is like a point where you could just say, you know what, I'm going to take this off. That's what I'll do here. Stop, break even. What I'm going to try to do is try to get out in the middle of this gap that might form. Might be an FVG, might not. We'll see. We're going to try to get out right in the middle. I don't like that we didn't get momentum through here. Still could continue higher, right? Just because we're rejecting this, it's not like, oh, I'm now flipping bear bias. I'm just going to get out because now I'm bearish. No, that's not how that works. It's just a point of a possible rejection, and I'm already up 40 points in this trade, so there's no point in risking more. The ICT always says, like, take your 5 handles a day, and you're financially free, right? So I've already done that, more than that on NQ. If 5 handles ES is what he talks about, usually that's like what, 15 points, 20 points NQ, kind of like the rough similarities there. So I'm out there. Beautiful trade. Could have held for the higher, but that's all right. Now we wait for the next macro, which is actually happening right now. So we have 10:06, which is 1:06 Eastern. Now we'll look for potential SMTs. Not seeing anything here. Still looks bullish, right? Not seeing any reason to short. And at this point, I would just chill, right? No trades. We're chilling. So now you're starting to see why I got out there, right? I don't know if this FE is going to hold. I don't know if it's going to push through it. But I'm not going to play with those profits that I was up so much with, you know. And obviously still just paper, but trying to keep it as realistic as possible, as if I was trading this on a live account. Any questions for anyone? Hopefully that trade all made sense. Very just clean, classic setup, right? All the steps came in perfectly. SMT, that clean bottom we made. Inducement on NQ, right? Inverse gap, creating that market structure shift, and if that's how you want to think of it. Inverse 4-minute FEG, and then return to discount, and that gap lined up with a 1-minute and a 2-minute FEG. Like, I'm taking that trade 9 out of 10 times. It's just, and the most important part is it lined up with time. This didn't happen during lunch hour. This happened right after, right during the bottom pretty much formed right at that macro time you want to see. Right here. Entry came in 9:50, so 12:51.50, which is right during that macro. I want to do this, but this is not an SMT yet. You guys know the minimum requirements. Sorry. What's your favorite prop from right now? Favorite prop from right now is Top Step. Without a doubt, it's, in my opinion, the best out there right now. Customer support's great. Rules are great. Very easy. I mean, as easy as it gets. It's as easy as it gets to pass your accounts. There's some firms that are a little easier, maybe like ETF. You can pass in 1 day, but the funded rules are amazing. Right, 5 days, $200, easy. Like that's whether you're on a 150K account or a 50K account, that should be cake. One trade setup is all you need, right? 50% payouts is pretty much, especially if you have the 150K account, that's pretty much better than anywhere else you're going to get for capped payouts, right? Because let's say you're trading Apex, right? And you have 50K, let's say you have 10 50K accounts. Obviously Apex has the advantage of being able to buy or have like 20 fundeds. So that's the advantage there, but it's just so much harder, especially for new traders, to pass accounts, get payouts, way more difficult. So let's say you have a 150K account with Apex, and you passed it, and you're trading the funded now. And the same thing happens with Top Step, right? Now let's say you get to 5K. Let's say to 5K profits on both. With Apex, I'm not sure what the cap is, but I think it's like 2,000 or 2,500, right? So whether you're at 5K profits, you're gonna take that first payout. You're getting 2.5K out, no matter what. Let's say you get to 10K profits, still 2.5K, right? With Top Step, you're aggressive. You can make 5K, right? Same as Apex. You're still taking that 2.5K because it's 50%. Now let's say you get aggressive and you get those profits up to 10K, like you did with Apex. Now that first payout, you're still getting 5K out. You're getting another 2.5K on the capped payout on your first payout. So with, there's no consistency rule, so you can make 10K in a day, and then you can make 4 $200 days, and you're getting your full 5K out, right? Super nice. You don't have to worry about making too much in a day. They just upped it to 5 funded accounts, which is pretty cool. So yeah, I would definitely say Top Step is leading the charge in terms of just making it as user friendly as possible. Now, once you're really getting advanced and you want to really scale, and you're trying to really not just make a living, but like make some serious money, and your trading system is good, and you're very disciplined, you're mechanical as hell, that's when Apex can kind of flip it a little bit, because then at that point having the ability to trade 20 funded accounts can outweigh all the cons of trading Apex. It can outweigh the trailing drawdown, cap payouts, consistency rules, flipping rules. If you're consistent and you know what the hell you're doing, being able to trade 20 fundeds, it can really do some damage. Like even just 50k accounts, you trade 20, you copy trade 20. Yeah, you copied even just 50k accounts. Yeah, 250k with especially with the promo they got going on right now. But even just 50k accounts, for example, you copy trade 20 of them. Oh my god. Let's say you just go for $200 a day, $200 a day times 20. It's 4k a day, right? You do that for what's the minimum? Then the minimum you need, I think this is what, 2,000 to get above the trailing. Yeah, you just made 40k, right? In one payout. 1 month you can make 40k, and it's like realistic if you know what you're doing. So that's where Apex comes in. But I definitely, especially for 90%, 95% of people, especially beginners, people that are working on fundeds, trying to get funded, people that are struggling with blowing fundeds, all these things. Oh my god, I would 100% say stick to Top Step until you know what you're doing. Without a doubt. Alright, so we did end up getting the push through, right? So how much did I make on the paper trade? 3k. So how many minis did I have? I had 5 minis. 5 minis made 3k, so $600 per mini on average. That's very solid, especially when I'm only risking 14 points. So I think I was only risking like less than 2,000, so I made almost 3R on that trade. That's the power of just being patient, waiting for your system, waiting for the setup, and then just executing, right? I'm on MFFU right now. Yeah, you have to deal with the buffer, but they seem great so far. I'm pretty lenient. Imperables will probably get Apex going after some. Yeah, my funded futures is good. It's solid. I still think Top Step is better, for sure. But, yeah, I mean, I would say Top Step, my funded futures, Apex, all top 3. And then Elite Trader Funding. I liked them for a long time, but I've now been waiting on a flipping. They promoted me to a live account, and I've been waiting on that live account since March, like 20th. So what is that? March, April, May. So it's been over 2 months now. Yeah, so I'm getting a little worried. I'm not going to lie. So I can't promote them anymore. I can't say that I like what they're going on. Alright, so this was my original target, guys. Remember? Hit nicely between the 2 and the 2.5. Right? Yeah, very bullish. Really clean price action here. I wasn't expecting to get such a nice clean move higher. But yeah, very, 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 very clean. You guys have any questions about bias or, reading the charts, psychology, just pretty much anything? You guys just shoot and I'll do my best to answer it. Just tap that 2.5 standard deviation. Rocky, no. Yeah, I got a really, wow, I didn't notice this. That's to the T right there. Top of that. And then push over the 2, and now we're starting to see some struggle at the 2.5. My bad if I missed it, but what's your bias right now for next week? You want to see 18,165 swept. Yeah, hold on. I kind of forgot where we're at here. Bias for next week is going to be pretty dependent, honestly, on this. Do you want to see us... Come on. I do want to see us get a strong close under this on the daily if we're going to continue lower. I kind of mentioned this earlier in the 90-minute chart. This is what I was looking at here, which is yesterday where I was really bearish, and I don't know if you saw my Twitter, but I posted that major trade I took. I shorted, in here, and pretty much held the whole day, even through this, to get down into this sell side. Because this is a very obvious market maker buy model, and then the top, and then the sell model. So this is like what I saw as the completion of this. Now we're getting this push lower, showing me that this obviously was not the target. The target was obviously much lower. Check out this sell side here, which was left behind. Where did we bounce off of? We bounced kind of just randomly, honestly. Nothing much there. Yeah, I really do want to see lower, but I said this before. The reason that this is high resistance liquidity down here is because this is liquidity. This is sell side liquidity that was formed from taking previous liquidity, which means it's high resistance, not low resistance, right? These down here is more, this liquidity here is going to be more of that low resistance because it was formed through not taking previous liquidity. Does it make sense? How this took liquidity, which makes this high resistance. This is formed without taking any obvious liquidity, which makes this much lower resistance. That's why you can see pretty much this kind of trend line. It's obviously pretty ugly, but there's a trend line here that kind of forms that you want to see taken. Whereas here, there's no trend line because any trend line that was made, kind of here, right, whoops, was taken from this wick here. So it's possible that we just move higher from here, and that's why looking at the daily chart, this is going to be such an important place because in order for us to push lower, getting a close, down below like 330s, hopefully, would be a lot more bearish, right? You also have this, which is like if you're whenever you're in a bullish, one second. Whenever you're in a bullish order flow, when you're in bullish order flow market, what what you want to see is, okay, what you want to see is previous top candles like this be used as support, which is what we're seeing here, right? This was the bullish candle that started this move. So if this gets used as support, we're most likely still in a bullish order flow market, right? Like, same thing you can see here, pretty much. These candles here get used as support. See that same thing here. This candle getting used as support, right? Pretty much all the same thing. Just boom, 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 and then now this is kind of the deciding factor here. What happens in this? See the same thing here. Drag that across, right? Boom, 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 boom. And now we're back within. If you want to do it a little bit kind of more obvious, that's kind of going to be more of the range. It's a very big range, right? So it's going to be difficult. But that's what you want to see hold if you're bullish. What things need to happen for your setup to EA+? What's your checklist for that? Honestly, we saw that just now. Like, this is an A+ setup. The one thing that this didn't have is like a higher time frame FEG or like PD Ray. But I mean, pretty much this checked all the boxes. Liquidity swept, SMT, SMT, and then this can happen here or it can happen in the creation of the low. Either one is fine. Want to see an inducement on either ES or NQ, so like a sweep of kind of internal liquidity, basically, is what the inducement is. So some sort of internal liquidity needs to get swept while holding the external, okay? And then FEG and inverse FEG. Or this inverse FEG can be a breaker, it can be even an inverse order block, but I like the breaker or the inverse FEG is much better. So yeah, that's kind of my checklist right there. And I mean, we also even have this breaker here. Let's see, that's 15 seconds, any better. It's not the cleanest because it's so big and kind of ugly, but this is technically your breaker. Right there. Cool. And then what is this? So we have, we have, accumulation, manipulation, bump up, reaccumulation, reaccumulation, reaccumulation. It's pure bullish bias. Pretty much gotta stay bullish until here. However, we do have this order block here, right? You guys know why this is a pretty clear-cut order block? Any ideas? Any ideas what makes this a very clear order block? Terrible idea. Okay. So, conditions for an order block. Needs to purge liquidity. Right? Okay, sorry. Convictions for a high confidence order block. Purge liquidity. Tapping into a key FVG. And then even higher confidence is a creation of a FVG off of the order block. That shows very obvious, clear-cut momentum. Okay. Now, this already held once, right? You can see that this is an order block because we tapped into this fair value gap, right? Push lower, close underneath, and then we retested it here, and then got that dump lower. Now that we've created this bottom and created a reversal pattern, this order block is not significant really. Like, it might have a little bit of bearing on a speed bump type thing, but now we're targeting liquidity. So, I mean, most likely this is at least the main target, and then, or at least the secondary target, and then this is the main target here, and even higher. You know, could go all the way up. You know, but I think this 404 is going to be the main, and then obviously ES is a lot stronger, right? So we might get an S&T at the top here for us to go right back down for the late PM session. So this is really what I'm watching here. We already have this clear divergence. Why is EOB marked on the candle before the candle taps into the... Yeah, this is going to be the first candle. This is the candle that starts the move higher. Also, you can do is like tap into different time frames, and you can see here, whoops, you can see here on the 3 minute, this is where it starts. See that? This is how it starts, the push up. And even the 2 minute, this is where it starts. So this 5 minutes chart, that's why I'm using it, because that's what started the move. And you can see here, we've already perfectly, to the flippin' tick, bounced off of it. Right? Like I said though, I don't think this is going to hold. This is not strong. This is something that I'm not counting on holding. If we were here, right? If we were in here before creating this bullish momentum higher and this bullish shutout, where I think, you know, because right now I'm thinking we're charting liquidity, it's a liquidity standpoint, but here if I thought we were still bearish or going lower, this is where the entry would occur, where I'm looking to shorts. But certainly now, I'm not blind shorting this in a million years. This is the stupidest thing you could possibly do. It's just, oh, order block, that means I short, right? Like, no, that's not how that works. That's how you get absolutely burnt. Just trying to short every PD array and long every PD array you see. Now, this is difficult. I'm still leaning towards the fact we're probably going to close under. But the only way in hell I'm taking a short, guys, the only way I want to take a short is if we take this internal or this internal on ES, right? We need to hold this, right? For a bearish order flow to continue. This needs to hold, absolutely needs to hold. 100%, right? Okay. So I'm going to mark this as a bearish breaker because that's kind of what it is. It's a little different, but for bearish order flow to continue, this needs to hold. I want to see a push above anywhere into here, and then I want to see this come back down and get the short entry. And then I think we can even hold this for. We don't need to go to low a day. That's the thing. We're also on a Friday here, right? It's Friday. Yeah, Friday. So likely daily candles don't. Daily candlesticks don't just close, flat. We're gonna have a wick most likely. So, rest of the day could get a little bit tricky. But if we're looking short, we need to see this internal taken. Absolutely mandatory. And then want to see an SMT between these, and then I need to see that pretty much the similar setup that we saw down here in the opposite direction. Yeah. Notice this order block acting as the speed bump. I'm still not going to blind short, especially when we're this close to the draw on liquidity on ES. Oh my god, the order block it's holding. That means I just slap a short, right? No. That is not what that means. Gun to my head, this fair value gap holds. And we run to buy side. As ICT would say. Could be wrong. Non-entry. Would not slap this long. But, if I had to guess, I would think this FVG holds, and we push at least to here, and likely to buy side. But we'll see. And if I did take this very risky entry, and we pump to here, so like let's say I entered 45, and we pump to 54, I'm slapping break-even stops every day of the week on a trade like that. Okay. That dog's about to freak out again. Go, Rocky. Go. What's up, Lanta? You missed the long this morning. It's like a free one-on-one, so I'm making it, yeah. Honestly, bro, milk it. Might as well. Yeah, same bias, guys. I mean, gun to my head, we bounce off this, go higher, but absolutely not an entry here. Be right back, hold on. And that's why you don't slap random women in FEGs. Just in case you guys were curious why. Or maybe you do. Maybe it holds. 7, 6, 5, 4, 3, 2, 1. Wah, wah. Let's see. Rocky Chill. My dog wants pets. Okay. I know. I know. I'd be pretty surprised if we fail to take out this internal. I would be very shocked. Yeah. ES is so much stronger though. You can see it just right there. Okay, we'll see if that was the target there. Just a little wick.
possible. Could set up actually a good buy here, guys. I'm not gonna lie. If we get a good pump here, we might get a decent long setup. Here's your aggressive long. If you want to just slap this 30-second FVG, it's risky, but the RR is very good. Right? This would be your break-even stop here. And target TP1, full TP up there. Okay, 3, 2, 1. There's the entry. Long. Let's do this on paper. I need to put the flippin'. Damn it. I'm not going to get the. Alright, modify. Screw it. Let's just go here. Whatever. It's paper. Stop loss low. So you should have, if you did this, you should get a better entry, but for the sake of education, we're just gonna do this here, and then you take off, trade, sell, holy mackerel, modify. Alright, let's go there. There's TP1 already hit for only 8 points. Wow, it's pretty sad actually. I thought it was higher. Should have gotten a better entry though. Like you should have 42 entry, but stops to break even. Probably would have been better if you just didn't put a TP in and you just put stops break even there. That's the better setup there, or the better way of playing this. The only thing is like now you have this massive 1 minute. Like this is going to be kind of risky. 1 minute FEG, 1 motor block, right? But the bias is still extremely bullish in the higher time frames, so should rip through it. We'll see what happens. You just kind of subjecting yourself to something like this happening, maybe, but it is what it is. All right, trade like this. TP's here, but I'm watching this, right? I'm taking profits the second we get internal liquidity hit on either one because of the SMT potential, right? I'm just giving you guys all the flippin' sauce today. Anyone take this trade? Anyone? Yeah, on eval, nice. So now, 2 ways of playing this. Mechanically, stop break even. If you're confident in this trade, then you go stop to like here, and you allow for this 2 minute gap to fill. Up to you how you want to play it. Alright, stop to break even hit. So, still bullish because of this 1 minute gap, right? This right here, sorry. But we also did reject this, like I said. So, still bullish, but that's kind of the problem with this super mechanical system, is just instantly throwing stops to break even. Is this will happen sometimes, especially on trades like this where we have this very significant speed bump, right? FVG plus order block plus the projection off the, like,
even though I'm bullish still because of the draw and liquidity on ES, and because we swept this low inducement, and so still bullish, but because I traded this mechanically on paper, you know, you're going to get stopped sometimes. And now it's just a matter of whether or not the stop saved me or if it just had me miss out on future profits. We'll see. You know, still bullish though. There we go. Pushing higher. After this, guys, I'm going to get off. Pretty good session, but I got to get going. Actually, I'm going to just call it here. You guys can finish off this trade, but I got to get going. So, good luck to everyone. This was a solid session. Probably hop on tomorrow as well. So, yeah, I'll see you guys. Yeah, have a good one, guys. Or not tomorrow, obviously. Monday. Monday I'll come back.